Hello friends, a very warm welcome to my channel. In today's video, we are going to do the analysis of Antony Waste Handling Cell. It's a company in the waste management and reprocessing sector, which is a very sunrise sector in these days, as all the companies and all the global economies are getting environment conscious. So there are a lot of sector tailwinds for this company. But at the same time, this sector and this company faces certain challenges. So we are going to understand the business and the challenges of this company. Also at the end, we'll try to understand whether the company stock is undervalued and it is worth an investment by us. So do watch the video till the end, because half information cannot build your conviction to invest in any company. If you are new to this channel, please do subscribe and hit the bell icon. And if you have not joined the Telegram channel yet, do join by searching my name on the Telegram. So let's get started. Let's start with the business analysis. Antony Waste Management is the second largest company in India in the municipal solid waste management sector. They are into business for more than 20 years and their completed and ongoing project count is more than 28. Now 28 might not be appearing as a big number to you, but let me explain you that each project gets them hundreds of crores of revenue, and each project is for a very long tenure of, let's say, 7 to 20 years. So that's why the number of projects are less, but the amount of revenue and the duration of the project is very high. In terms of the capacities, they have spread across capacities across India in different states, but one large facility in Mumbai, which is one of the largest facilities in Asia. In this facility, they process almost 60% of the waste of entire Mumbai region. So by this you can understand the extent of capacity of this facility. They have their own fleet of vehicles, more than 1200 vehicles, and they operate in 9 states, and they are working with almost 23 municipal corporations of different states. In terms of the employee strength, they have more than 8,500 employees. Now let's talk about the management of the company. The chairman and managing director of the company is Mr. Jose Jacob. He has done BE in mechanical engineering, and he has also done authentic leader development course from the Harvard Business School. He has more than 20 years of experience in the waste management industry. Now, before we get into the specifics of the business of the company, let's try to understand the value chain of this industry or this business. So as you can see on the screen, municipal solid waste generation is first collected and transported to the sorting centers, or you can call it a transfer station. And when it reaches there, the different kinds of waste is segregated. Now, what are broadly, there are 3 types of different waste which can be categorized. The first is organic waste, the second is recyclable waste, and the third waste is the inert waste, which cannot be either decomposed or recycled. That falls into the third category. So the organic waste is further processed by technologies like composting and biomechanization. Now I'll explain you in brief what does this mean. In composting, the biodegradable waste is converted into things like compost, which can be used as fertilizers for different plants or soil. In biomechanization, we can use the organic waste to generate biogas, which can be used as a fuel for different industries. Then the next category we come to is the recyclable waste. In recyclable waste, there are different processes through which the waste can be recycled, like gasification, incineration, pyrolysis, and recycling or reuse. And through these 4 processes, the waste in this category can be reprocessed to manufacture different products. The third category, which don't fall into either of these, are the inert waste, where we cannot do anything much with this kind of waste, and this kind of waste is used for landfilling or biomining. In landfilling, these kind of waste are filled into the different pits of the land. Now in this chart which we are discussing, wherever you see the dark green color, the company is operating into these kind of processes. So almost the entire chain is covered by the company except gasification and pyrolysis. So you can understand the extent of end-to-end capabilities of this company. Now let's talk about the business of the company in more detail. As we have discussed in the earlier slide, this company offers end-to-end capabilities. Now what do we call as end-to-end? We'll understand in detail. Right from the door collection till recycling, entire thing is offered by the company. To start with, the first step is door-to-door collection of the waste. Then that waste is transported to the sorting centers. At the sorting centers, the segregation of different waste into different types or categories happens, and further after that the company offers services like construction and management of the landfills for the inert waste. And for the recyclable waste, the company offers recycling services with their own plant and machinery. And for the third kind of waste, which is the organic waste, they also offer composting services where they create compost or biogas. So by doing all this, they convert the waste into energy, which is used by different industries like the cement industry and various other industries. So this way the company has all the capabilities required to run this business. To offer this kind of services to the customers, the company has various infrastructure available. Like we have discussed, they have the largest unit in Asia in Mumbai, and to support them they also have different fleet of self-owned vehicles. As you can see on the screen, the different types of vehicles are mentioned here, and the number of vehicles which they operate is also mentioned, and all these are self-owned vehicles. Interesting thing to note is the company is very tech savvy, and they try to increase their operational efficiencies by doing things like they have fixed the GPS management systems in almost all of their vehicles, so that they can track the locations of their vehicles actively, and they will reduce the idle time of the vehicles and use them to the fullest, so that their operating efficiencies improve and their profitability margins also improve. Geography wise, the company has done projects in various states of India. As you can see, the orange colored ones are the projects which the company has already completed, and the grey color ones are the projects which are ongoing. You will observe that the ongoing projects are now concentrated in specific states. This is because the company is operating in a cluster based approach. So what is a cluster based approach? In this, when a company starts doing business in a particular region, they will try to do more business and penetrate deeper in the same region instead of diversifying to the other regions. In this, since the company already has infrastructure developed in that particular state, it is easy for the company to get more clients in the same state, and also for them to do their business more efficiently and easily. Now let's understand where their revenue is coming from. 62% of the revenue of the company comes from the collection and transport of waste, 23% of their revenue comes from the processing of waste, and 15% of the revenue comes from the other services like the contract services. Now what are the things covered under the contract services? The manual and automated sweeping comes under this, sale of goods and revenue from scrap comes in the other services. So this is about the business model of the company. So you have clearly understood the end-to-end capabilities of the company and their potential to deliver services in this sector. Now let's understand the industry, as this industry is a sunrise sector, and globally all the economies and the companies are becoming more environmental conscious. The government is also giving a lot of stress on this, and the companies have also are required to follow certain environmental norms as well as report certain environmental norms in their annual reports also. So the global waste management industry is almost of a size of 23,000 billion rupees, and the Indian industry would be somewhere around 50 billion rupees. So you can understand the extent of scope in this industry. The amount of waste generated in India from the present quantity of about 82 million tons per annum can go up to 115 million tons per annum by FY25, and the government in their budget is also increasing the allocation for the waste management sector. Compared to the other countries globally, India has a lot of waste which is openly dumped. Out of the total, almost 77% of waste in India is openly dumped. So there is a huge opportunity to pick up and process this kind of waste. The municipal solid waste management market is expected to grow from 50 billion to about 98 billion in FY25. So in the next 5 years, this market is almost expected to double in size. So if the market itself is having such tailwinds, the companies will definitely benefit. The market will grow at a CAGR of close to 14% for the next 5 years. So this gives us the hint that the industry has a lot of tailwinds. Now, what is the competitive edge of this company? Why should you invest in this company and not in other waste management companies? Although there are not many waste management companies listed on the stock exchange as yet, but still let's understand what is the competitive edge of this company. They are the second largest in the municipal solid waste management sector in India. So there is a leadership of this company. They have end-to-end capabilities, as we have discussed, right from picking up the waste till converting it into recycled products and biomass or biogas. They have a very diversified business model. They process all kinds of waste and they operate across different geographies in India. They have a very strong track record of delivering the projects to their best of their efficiencies. So when they have a strong track record that they have done good work in the past, there are higher chances that the municipalities tie up with these kind of companies instead of newcomers. They have technology backed vehicles, as we have discussed. They have a GPS system installed in the vehicles, and in their processing units also they use latest technologies. The company and the management have strong domain expertise, as they are into this business for more than 20 years, so they can do better than the new startups entering this business now. Now, what is the growth strategy of the company going further? The company is adopting a cluster-based approach, as we have discussed in the earlier slide. They will concentrate first on the areas where they have already presence and try to penetrate deeper and get more projects in those areas, and then they will expand to other geographies. They will also diversify their business into new emerging areas, like there are different ways in which the waste can be processed and newer products can be generated from the recycled waste. So they are focusing on those areas and generating new products. They are improving their operational efficiencies by the use of technology, and their project selection will be very rational. Now, why we are talking about this is whatever project they take up, that should be viable for them. They should be profitable for them. Whatever profit, whatever contract they are entering into with the municipality, there should be money left with this company after processing the waste. If they get into some terms which are not favorable for them, the company's project will fail and they will end up making losses in the project. So they will take rational decisions in selecting projects. They will focus more on the urban and semi-urban areas. Now, why will they do this? Because municipalities in these areas are more financially competent and there will not be any risk of non-payment of their fees. They will focus on areas of waste to energy, where the waste is picked up and converted into reusable fuels like RDF and biogas. The company will focus on selling the recycled products to generate additional revenue. They will do biomining. They'll focus on the emerging new areas like biomining, biomethanization and refuse derived fuel. In a brief, let me explain you what are these. Biomethanization is using the waste, organic waste, to generate biogas, which can be used as a fuel for different industries. And refuse derived fuel is also a kind of fuel which is used by industries like cement. Now, what are the risks which this company might face? It will be very important to understand the risks of this industry and this company specifically, so don't miss out this section. The project risk is the risk of getting projects or getting profitable projects. Then the credit risk, since they work with different municipalities, there are a lot of times where there are issues with different municipalities regarding their payments. So they get into litigations and they get less or delayed payments. Viability of the projects is another risk. The projects which they take up should be viable and profitable for the company, and in case the cost of operation of the company increases, there should be escalation clause in the agreement so that the company ends up profitably. The revenue received by the company is not even in all the quarters. There could be revenue received in a staggered manner, and there could be a regional risk as the company operates in only selected states as of now. So if by chance those municipalities do not wish to work with this company, the company's business may be drastically impacted. Now, who are the competitors of this company? There are very few listed competitors, and most of the competitors we are going to discuss are the unlisted ones. In the listed ones, there are small companies like Eco Recycling, Ganesha Ecosphere, Cerebra Integrated Technologies, and in the unlisted space, the company has competition with different companies like EcoWise Waste Management, Green Power Systems, Synergy Waste Management, Sampoorna Earth Environment Solutions, and Greenobing. Like this, there are several other companies operating in this space. So although this company is in a way the second largest in India, but the market itself is very fragmented and there are huge number of companies doing different things in this sector. Now, after understanding the business, the risk and the different competitive environment of the company, let's talk about the numbers. Starting with the revenue, in the last 5 years, the revenue has gone up from about 276 crores to 648 crores, which is growing at a CAGR of almost 22%, which is a very good number. In terms of projects, the company was doing around 14 projects in FY10, which increased to 15 in FY15. So there was not much growth. It's increased to almost 20 projects in FY22. As we have discussed, the number of projects may appear to be small, but the amount of revenue which the company gets from these projects and the duration of the projects is huge. Now let's look at the duration of the projects. The collection and transportation projects average around 7.7 years. The sweeping projects operate around 7 years, and the processing projects continue for around 23 years on an average. So by this you can understand they are very long-term projects. In terms of EBITDA, the company was doing around 70 crores in FY18, which was almost flattish in the next year, but went up to about 126 crores in FY20, and now they have done around 148 crores in FY22. In terms of EBITDA margin, the margins have slightly reduced. They did about 28% of EBITDA margin in FY20, but this came down to almost 23% in FY22, which is not a very good sign. The profit after tax was almost flattish in the first 3 years of 18 to 20, but this shot up to almost 68 crores in FY22. It would be critical to see whether this growth in the profit after tax will sustain or not. The profit after tax margin is almost the same. It is around 10% for the company. The equity has gone up post IPO to 14 crores. The company has about 400 crores of reserves on the balance sheet. The debt is more or less in control. They have about 171 crores of debt on the balance sheet, which is just about 0.41 in terms of debt equity ratio. The trade payables have gone up from 30 crores to about 87 crores, but this is in line with the revenue growth of the company. The fixed assets have gone up from about 40 crores to about 250 crores in FY20, but from there onwards there has not been a major addition in the fixed assets of the company. The trade receivables have gone up from 44 crores to 128 crores. This is again an area of concern for the company. As and when the revenue grows, if the trade receivables are growing in line with the revenue, then it's fine. But if the trade receivables grow abnormally, then it could be a red flag for this company, and it will show a concern that the company is not able to collect the money from those municipal corporations with which the company operates. The debtor days are more or less the same. They operate at around 72 debtor days. The company has about 93 crores of cash on the balance sheet post IPO. The operating cash flows have always been positive. The company is doing somewhere around 100 crores of cash flows in the last 3 years. But the company is not able to generate sufficient free cash flows. The free cash flows have been negative in FY19 and FY22, and in FY20 the free cash flows were nil. So in the last 5 years the company has not been able to generate sufficient free cash flows. This could also be on account of capex being done by the company. But still, if the companies are able to generate strong free cash flows, that is a very strong trigger to select those companies for investment purpose. In terms of ROCE, the ROCE went up to about 35% in FY20 but came down to 25% in FY22. Now let's understand the shareholding pattern of the company. The promoters hold about 46.2% of the company, which is okay but not that impressive. The DIIs and FIIs hold about 6.7 and 11.8%, and public holds almost 35% of the company. There is no pledge. The ROE is somewhere around 17%. The company does not pay any dividend. The stat auditors of the company are Walker Chandiok and Company, and there are no risky related party transactions found while going through the annual report. The remuneration of the executive directors is about 1.35 crores. Now let's talk about the valuations of the company. The market cap is just about 767 crores, so it's a small cap company of face value 5 share. The current price is somewhere around 271. The high and low is 455 to 238. So there has been a steep correction from the highs of 455, majorly due to several issues which were out recently because of the collection uncertainties of the company and litigations with the municipal corporations, as well as the income tax surge which happened in the company. So after this correction, it is available at a PE of 11, at a PB of about 1.8, and market cap to sales of about 1.18x. So on face of it, the valuations appear cheap, but the stock market is also smart enough to give the company a lower valuation. Now why is this company being given lower valuation? Because there are certain uncertainties in the business. It's a newly listed company. There is a lot of competition in this space. As moat also, there is no substantial moat in the business model of the company, as this sector is very fragmented and there are a lot number of players in the unlisted space operating in this sector. The company has to deal with different municipalities, so getting these kind of projects itself is not easy on a continuous basis, on a regular basis. Then after getting the projects, the collection of revenue is a little uncertain. Then there could be several litigations which the companies have to do with the municipalities. So these kind of uncertainties lead the market to give these kind of companies a lower valuation when compared to the other sectors. Now comes the question whether these valuations will remain the same. They could remain the same, but they can go for a re-rating also. But when would that re-rating happen? That would happen when the company shows a consistent track record of getting projects. When the uncertainties which we are talking about get reduced in this company, then definitely there could be a re-rating. But in spite of a re-rating, I feel this sector may not be able to get a very high valuation as compared to the other sectors. Now let's look at the chart. The chart is a bit weak. Whenever the stock is going up, it is being sold hugely, and now again it is coming near its bottom of somewhere around 230 250 rupees. So in such kind of weak charts, it is important that whenever you take a position, you always keep a stop loss. So the all-time low of the stock can be kept as a stop loss if somebody wants to enter this stock, as that should add as a strong support, and if that is breaking, then there could be some further uncertainty in the business of the company. That is why those kind of lows get broken. So this is about Antony Waste Handling Cell. To summarize, let's discuss the thesis and antithesis points. The sector in which the company operates is the sunrise sector, as the entire world is focusing on the environmental safety. The company is one of the leaders in the sector in which operates. They have good infrastructure and experience in this field, which is not easy for somebody to replicate who is a newcomer. They have long-term contracts with different municipalities, so they have sustained business for the next few years. They are also participating in the new emerging opportunities, as we have discussed. In terms of competition, the company has to compete with a lot of unlisted players, and it's a fragmented market. The company has to deal with different municipal corporations and government bodies to get the projects and get the money from the projects, which is very uncertain, and the company doesn't have a very strong moat in their business model, and the growth of the company totally depends on how best the company's management can execute their business. So do keep all these things in mind before you take decision of investing in the company. So this is about Antony Waste Handling Cell. I hope you like the analysis. If you like it, hit the like button, subscribe to the channel. And if you want me to make videos on your favorite stocks, do comment the name of the stock in the comment below. What is your view on this company? Do share your views in the comments as well. Thank you for watching and have a wonderful day.